Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy investment advisor Ross Clark gives us insight into the Loonie sudden plunge. Doug Casey of Casey Research gazes into his crystal ball on the investment trends he expects to see in the new year. We talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
Happy New Year, everyone. Our first guest of the year, Ross Clark, investment advisor at CIBC Wood Gundy. Ross, welcome to the show and welcome to the new year.
And let's hope that this is a good year for most people.
Maybe explain what's happening with the Loonie.
It had been holding up reasonably well for the last 3 or 4 weeks, and the catch-up day was here. You expect to see some volatility during the Christmas New Year stretch when not all the players are around. And so anyone looking to move a significant position in the market will find there's not a lot of depth there to absorb it. So, Canadian dollar down, we got almost a cent on the day today, 0.99, trading now at 85 cents. And we haven't, numbers that we haven't seen in a long time, but it's the trend that clearly is your friend in this market, and whether it be the 1% move down in the Canadian dollar or a 0.95% move in the U.S. dollars against the basket, or whether it's the euro just continuing to give up ground. I mean, we're down 94 points on the euro. That's 0.8% on the day. So it's this flight of capital that we saw last year. It started in the spring, and it's been gaining momentum. What I find interesting is that we're now getting close to some measured targets that we had. The dollar index trading at 91.12. That's the U.S. dollar index. Target in there is in that 92 to 92.5 range, from where we expect to see some resistance. Now, the other side of the coin, the Canadian dollar, that whole distribution pattern that happened from 2010 through the fourth quarter of 2013, the whole height of that pattern, when you measure it down from the break that we've now been seeing for this last year, was to 84.60. So, we're within 40 ticks of that. So I wouldn't be at all surprised that you see some of these excesses just sort of run their course in the next week or 10 days. And, that's what we talked about, that January might be sort of an extreme for these moves right now.
Good idea for Canadians to invest in U.S. dollars right now?
I think it's getting late in the game for that one. There should be a better opportunity, and my view is that, unless you need to do it right now, I would wait for the market to have some kind of a bounce in here. Don't think that it's going to be the end of the move to the downside, but it's enough that we're overextended. And when you look at the Canadian dollar, you do overlay the dollar with the oil market, or you overlay the charts with the Commodity Research Bureau Index, the Deutsche Bank Commodity Index. I mean, you'd have a hard time telling which is which. And so, here you are with oil sitting at $52.50 as of tonight. And we're getting into what is normally a seasonally low period. December, January for the oil market tends to base out in the latter part of this month, and then the oil stocks bounce back. As you know, we think that you'll need a consolidation in the oil market as part of trying to build a base. It's not going to happen on a dime. We invariably spend 2 to 3 months consolidating before you can put on anything sustained in the upside. So I think, for investors, you stay away. For traders, there's opportunity.
What about the precious metals? Are we going to see a move there just because oil has dropped so much?
Well, it's interesting. We've been watching, as we came out through October, November, things got to extremes and we got a good rally off the bottom. Couldn't hold it in the middle of December and had to come down and build a new base at a lower level. So, the last week and a half or so here, so from December the 22nd, you've started to see a bit of a change in character. The mining stocks, if you look at the XAU, the GDX indices, they have not put on lower lows since the 22nd. And actually, as of today, they've closed at the best levels in about 10 days. The silver market, which had led off the bottom initially about a month and a half ago, ran its course on the upside, has built consolidation here. And we're into the favorable period of the year for silver from this point through the latter part of January. And then gold today managed to just eke out a marginally lower low down to 1169. The previous low had been 1171. So we went down, they cleaned out some of the stops underneath, and then rallied reasonably well through the day. So you've got what I call the makings of an isolated low. Or a spring, as others might call it, where you've just done that little clean out, and if you can rally quickly off that bottom, then you've got the makings of something to the upside. So, as I view it, gold's sitting right now at about 1187. If it pushes through 1210, I think you start to look for numbers maybe in the 1255 to 1270 range. And the best markets are when the gold is up, but being led by silver, which in turn has got more strength in the miners, and we're starting to see that in the last 48 hours.
And I've been told when silver starts to go up, it's not going to be just a little bounce, it's going to be quite a spring.
Well, most silver moves off the bottom are fairly dramatic. It tends to be the one commodity that makes its moves very, very quickly. And what I would look for is that if it is too fast a move, and we've got ways of measuring that, it will run out of steam fairly quickly. I don't know that we've seen the final bottom in here in the silver market, but there could be a good trading turn right now.
And even if you bought it right now and it still goes lower, odds are pretty good it is still going to get that bounce sometime this year.
Well, a bounce at some point. Still you have to have appropriate money management and don't let the position get away from you. There are a number of us that have been looking for potential lows in the last year or two. I mean, my view was that 2014 had the makings of being a basing year, and up until the fall, it was really looking like that. And at this point, I'd need to see numbers getting well through that 1270-ish range I'm talking about as resistance before I'm convinced that you've got a lasting bottom in place.
Ross, you said the Russell Index has reached a very important point right now.
Yes, this is this time of year. We look for the Russell to do well. In particular, the Russell Index, so people know, is the small cap index, 2,000 stocks. And it has clearly been a major underperformer for the last year, topped out in February of 2014, and just managed to basically come up and test those highs in the spring, in the summer, and again later in the year. And then finally, as part of our turn of the year, where you expect to see strength from mid-December through the end of the year, the Russell really did come to life. It had a great move off the bottom here. Very good return for anybody who took the call option trades that we were recommending. And as part of that move, it's now triggered another what I'll call an anomalous event here. Whenever the Russell makes a new high, and this would be like a new all-time high, or in this case a 3-year high, without having had strength and had a new high within the previous 6 months. So if it hasn't had one of those nice long stretches like we saw in the Dow or in the S&P, where you were consistently making new highs, and it became a headline item that no longer was causing any interest for people because it was so common last year. But for the Russell to make a new high, as it did in the 26th and 29th, that really stands out. In the years since the index was formed, 1979, there's only 15 times that this has happened. And every single one of those times, the market was higher 3 weeks later. So this is a very short-term type of configuration that jumps out. It's for short-term traders or option players. It's something that can be worth taking a look at. So that's the bottom line, is that you're going to be higher 3 weeks later. But in many cases, it's not by a significant amount. It's like a fraction of a percent, maybe 1/10, 0.2%. So we looked a little deeper into that and found that from the period where the new high occurs through that third week, that if you look for a correction as an entry opportunity, there are some very consistent moves in there. And one of the two ones that we found that provided good theoretical entry points, because we haven't done these in the past. This is just a new piece of research that came out. If the Russell drops back to its 20-day rising moving average, which it did as of Friday, that has been a great entry point. And the market has never been offside more than 3 days after that, and by no more than 2% on a closing basis. And also, if you look at the point where the momentum had peaked on the Russell, and maybe it didn't drop to the 20-day average, which is about half of the instances, after a 5 to 6 day period from the high, you tended to get that low, and then the market moved higher. Now, all of this, you question, why is the Russell so important? Well, it's a small cap index, and by the time it's finally got that much momentum to make a new high, it doesn't run its course just immediately. It might take this breather, but it inevitably has shown continued strength. So this is, as I say, one of those near-term opportunities that people might want to take a look at in the coming week, because we have had the style of correction. It's back to the December highs and testing that. So short-term trade. And on the upside, this is like the turn of the year trade. We say we're here for a good time, not a long time. Look for the trade to be over, I would say, within 3 weeks of where we are right now. So that's my little gift of a new piece of research for the listeners.
If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up, Doug Casey of Casey Research on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. Our Albert K. Liu has an exclusive interview with Doug Casey of Casey Research.
I'm joined today by Doug Casey, all the way from Uruguay. How are you, Doug?
Good, Albert. It's a pleasant day down here in Punta del Este, which is normally where I am at this time of year. I'm overlooking the ocean, mild, sunny. It's just delightful. Very different from conditions in North America at the moment, I would think.
Absolutely, and so nice of you to take time out of your paradise there to talk a little bit about what's coming up. We're starting the new year. 2015 is here, and before we look ahead, which I definitely want to do with you, I thought it would be nice to just kind of look back at 2014. There's a lot that happened. If you just look at the markets themselves, that was interesting. You had the Dow started kind of stumbling out of the gate and then finishing strong. Gold looked like it was going to have a great year, then retreated back. Silver was almost at $22 per ounce earlier in the year, and then got hammered all the way back down to 16. And then in politics, we had the oil markets plunging from 100, over 100, down below 60. That precipitated a plunge in the ruble. And then on top of that, we had the Federal Reserve executing its taper operations. Of all of those things that happened and other things, did anything truly surprise you?
Yes, actually. Almost everything surprised me because, as you're aware, I'm sure, I expect that what started in 2007 will someday be known, or could be known, as the Greater Depression. Because what started in 2007, I think, will historically be seen as the beginning of the Greater Depression. And the governments of the world, and they've really acted in unison to a great degree, have papered over the problems by creating trillions and trillions of new currency units. And I'm quite frankly surprised that things have been as mellow and as non-volatile as they have been for the last few years. Most people think that all's well, there are no problems, that the powers that be have fixed everything up. Frankly, I thought that 2014 would be the real turning point. I thought that the stock market might roll over and head down. I was wrong. I thought the bond market, which has been in a bull market since basically 1982, would finally start heading south. I was wrong. Interest rates have actually gone negative, unbelievably, in some countries in Europe. I thought that gold and silver, I thought the bear market that started in 2010, or was it 2011? 2011 would turn around again. So from a prediction point of view, I've got to say that I struck out. But the fundamentals are still in place. So I can pretty much tell you what's going to happen, but the timing is always iffy. I think that things, in fact, are starting to roll over now, and 2015 is going to be a very turbulent year. We'll see. I could be wrong again, but I actually don't care, because when it comes to gold and silver, I don't view them as speculations. I just accumulate them for the long term as savings vehicles. And I'm not short the stock market, although I think now is a good time to go short. And I'm looking to go short the bond market, especially Japanese bonds denominated in yen. But I haven't done that yet either. So looking back at 2014, I'd say that my track record was not good.
Now, that probably owes to your bias as basically an economist and a long-term strategic speculator. If you take off that hat and just think like a short-term tactical trader, maybe some of these moves were not as surprising. Meaning you would expect, for instance, if the Dow to stumbled, the Fed would come in and prop it up, things like that. So is it less surprising if you think of it kind of like a short-term bond trader?
Well, traders tend to be trend followers, and they're right most of the time, because trends in motion tend to stay in motion. And they don't really change trend until there's a crisis, at which point a new trend emerges. And we haven't had a crisis in 2014. So I suppose it was foolish of me trying to arbitrarily pick a top or pick a bottom, as it were, in different markets. That's usually not a formula for success. So mea culpa. And I don't want to make that same mistake this year, but I will say this. I think the chances of a real crisis developing and the trends changing this year are very high. For a lot of reasons, actually.
Let's talk a little bit about the junior mining and energy sectors. The TSX Venture Index hit an all-time low this year. It was even worse than 2008. And I saw a very funny article in the Financial Post. The gentleman was basically saying, look, juniors have been in the garbage can for a long time, and this year they actually fell through the garbage can. Is there anything below that garbage can lending support, Doug, or do you think they're going to go down even more?
Well, most of the juniors actually belong in the garbage can all the time, because basically it's most of the junior market is a couple of guys with a mule and some money that they raise out there looking for the treasure of Sierra Madre. And the odds aren't good. It actually is a genuine fact that if you find an anomalous occurrence of a valuable mineral, the odds are about 1 out of 3,000 statistically that it will ever become a mine, an economic deposit and then a mine. So it's a real long shot type of thing. And most of these juniors, as they always have in the past, in the 40 years I've been watching these markets, will dry up and blow away, or maybe change their names and be reconstituted as something else. I guess a lot of them are being reconstituted as marijuana stocks now, actually. Much as in 2001, they were being reconstituted, failed mining companies, exploration companies were being reconstituted as tech companies. So things don't change from that point of view. But what I'm doing is doing private placements, which is, I think, the best way to invest in these markets, in companies that have really good people and have really prospective properties and have adequate finances. So I'm being very selective, and I'm buying these things, and sometimes you can get them with 5-year warrants. The market is so bad now. So that's the way I'm approaching it.
When the markets get this bad, people start talking about capitulation. In your dealings directly with issuers, are you seeing that we're actually close to that?
Yes. It's possible with companies that do have good people and do have good properties in the right jurisdictions, but they're still out of money. And so they're willing to, even at these very low prices, arrange private placements at discounts from the market and with 3-year and 5-year warrants. So that's pretty close to capitulation. And the average guy out there doesn't even know that these little stocks exist, much less care about them. So I think it's an ideal time to get into the market, which is also true of 2014. Whether that changes in 2015, I don't know. I think it will. But I'm planning on it, and that's how I'm reloading for that eventuality. And I say this with the recognition that mining itself is a crappy business. It's a horrible business in just about every way possible. Much worse now than it was 20 years or 50 years ago. And mining exploration is much worse again. But it's not going to go away because civilization is built on the 92 naturally occurring elements, and the only way we can get them is by mining them, basically.
One person who shares your perspective, I think, is your friend Rick Rule. He sees a spectacular bull market coming at some point. And one phrase that he has, which I enjoy, is that bear markets are the authors of bull markets. And if you look at this bear market, I think the bull market that follows should be Pulitzer Prize worthy. What do you think?
I completely agree. Some of the bull markets that arose from bear markets, starting in the 1970s and through the 80s, were breathtaking. Where the junior stock market in Vancouver as a whole went up 1,000%, and individual stocks went up 100 to 1. Some went up, well, a couple of them actually went up 1,000 to 1. So that's worth waiting for, and I think it's going to happen again. And this time it's going to be supercharged by all the money that governments have created, or I shouldn't say money, I should say currency to be accurate. All the currency governments have created over the last 7 or 8 years, which is going to come out of deep sleep, and it's going to be used to speculate in things as people try to outrun retail inflation. So I totally agree.
Our Albert K. Liu continues his exclusive interview with Doug Casey of Casey Research.
Just as a quick aside, because you mentioned the cannabis market, another thing that Rick Rule has said that I enjoyed is that it's nice to see some of these or investors, entrepreneurs dealing in a market that they actually have firsthand experience in. So I think a lot of people do observe and agree that a lot of the failed mining companies have been reincarnated as future failures in medical marijuana. But do you see some legitimacy there?
I'm viewing it as a speculation because, of course, I completely approve of not just marijuana being legal, but all substances being legal. I mean, it's if you own and control your own body, you have a right to put whatever you want into your own body. Use your own judgment. That's what being an adult is all about. So I completely approve of the fact that marijuana, and then I think other drugs are going to come out of the closet, as it were. But, I mean, I don't indulge in them myself, and I'm not sure that the fact that they're legal is necessarily going to mean that they're going to be commercially successful for public companies, because, you know, governments are going to use them as a vehicle for generating tax revenue, and the regulations are going to be brutal. So I see them as a speculative vehicle more than, you know, a sound long-term growth investment. But I'm still interested in them, although there are too many out there at this point.
It's funny, I was talking to a friend about this and just asking him why all of a sudden all of the movement in this market, and he explained to me basically the chronology of what happened with all of the court challenges and whatnot. And what struck me is how quickly this thing went from being a controlled substance to basically a regulated cartel. It seemed like it happened almost overnight.
Yeah, it really is rather amazing. It's, of course, the whole idea of criminalizing plants is criminally stupid, but that's the type of thing that you can expect from the kind of busybodies that go into government. They're all about control and knowing what's best for other people and treating citizens like children. There's so many things that they like to illegalize, everything from weapons to plants to processes to places where you can put your money. It's really quite discouraging. But this is a step in the right direction.
Okay. Now speaking of plants, you like to say that being a plant is not a good way to live your life. You like to move around a lot. And one of the places that we both like, you've said actually it's perhaps one of your favorite places in North America, is Vancouver. And it's a place that I enjoy too. But what's going on with the real estate market in Vancouver?
I think it's completely insane. Vancouver is, from a real estate point of view, is one of the most expensive cities in the world. And whenever there's a bubble in a market, there are always good reasons, quote unquote, for why the bubble exists. In the case of real estate, well, it's not just Vancouver. It's London, it's New York, Sydney, a number of places in the world. Really, the cause for it is all the currency that's being created by governments. It's got to go someplace. So that's really the most basic cause for it. As far as Vancouver itself, in addition to that, there's a lot of immigration from the Orient. I understand that certainly Vancouver, and perhaps this is true of British Columbia as a whole, is over 50% people from the Orient now, China, India, other places. And they're generally wealthy when they come over. Certainly the Chinese, when they come over, are doing a very prudent thing, getting money out of their native country into a more stable country, and they're buying real estate in Vancouver. So that's partially what's in back of it. And I think there are a lot of empty apartments in Vancouver that are being held as stores of capital or investments or speculations, depending on the psychology of the buyer, mostly from Chinese people. Of course, the same thing is happening in other places in the world. Dubai, that market totally collapsed in 2008 and 2009, and it's come back strongly. I mean, there are construction cranes all over Dubai, and people are still buying those apartments, except in this case, it's people from the Middle East and people from India to get their money out of their home countries, and there are a lot of empty apartments. I don't think it's going to end well, though, frankly, because when you buy real estate, it deteriorates, and it needs to be maintained, and you've got to pay real estate taxes. And in Vancouver, I used to be a homeowner in Vancouver. Real estate taxes are very high in Vancouver. It's costing you typically 1.5%, maybe 2% of the value of the house per year to maintain it, plus the utilities and everything. So I understand why the Vancouver market is so bubbly, but I'd much rather be a seller than a buyer of Vancouver real estate at this point. If you want to buy some property in North America, now's a good time to look at farmland, not apartments.
Interesting. I know it's been some time since you lived in Vancouver, although you visit frequently. I lived there over the summer, and my own personal observations were, one, that downtown the rental prices are completely decoupled from the selling prices, and they're no more meaningful, the prices that is, than prices in Phoenix in 2005. But the other thing I noticed, and maybe you don't know this, that Vancouver has 3 Chinatowns. So there's the original one near Main Street. There's the one on Number 3 Road in Richmond, and there's a new one in a place that some people call the British Properties.
Yes, the British Properties. I've never been a fan of the British Properties, actually, because it's really just a suburb, and you need a car to get anywhere. I don't know. When the market comes down in Vancouver again, if I want to move back to Vancouver, I'll probably look at waterfront, number one. Of course, everybody looks at waterfront first and foremost. And secondarily, look at our downtown area where you can walk to the things you want. But the British Properties is one of my least favorite places in Vancouver. And of course, the next question might be, what's going to happen to China in the next few years? Because what happens in China is going to have a follow-on effect to a lot of other places in the world where Chinese are emigrating and Chinese are investing.
Yeah, so what are your thoughts on that, actually? That's interesting.
I applaud what's happened to China since Deng Xiaoping turned things around from the disaster that Chairman Mao made. And the boom that China's had over the last 30 years is real, it's genuine, and it's one of the great things to happen in world history, quite frankly. That's the good news. But the bad news is that the Chinese government has been profligate in creating lots of credit in yuan. So part of the boom, this latter part, I think anyway, has been artificial. They have misallocated gigantic amounts of capital in building things that may or may not ever prove to be economic, whole cities and so forth that may turn into white elephants. And they've done this through their banks. And this is very problematical because the average Chinese still really works and produces and saves. But how do they save? Well, primarily by putting their currency in banks. But the banks lend that currency out on a lot of uneconomic ventures, which could go bust. So at some point, when Mrs. Wu goes to the bank to withdraw her savings, they might not be there. Or if they're there, it's going to be in a radically depreciated currency. And you could have hundreds of millions of newly middle-class people in China that are bitterly unhappy as a result, and there could be a revolution. That's not a prediction. I'm just saying that you have to look at it as a possibility, even after this fantastic and largely real boom that China's had over the last couple generations.
Right, it's hard to go back, isn't it, to the old living standard. Someone, I think it may have been Jim Chanos, says that China is the only country that knows what their GDP for that year is going to be on January 1. And so basically the numbers are not as meaningful there. So what things should we be looking at then if we can't really look at the numbers?
Yeah, that's a good point, Albert, because you can't trust the Chinese numbers any more than you can trust the U.S. numbers, or for that matter, the Argentine numbers, which spending a lot of time down here, I recognize as being complete fantasy land. But this is true of all these governments, because all over the world, governments have insinuated themselves into the economies of their countries, and citizens think that governments are supposed to control the economies of the countries. But this is a recent phenomenon, actually. Before World War II, it was not the case almost anywhere in the world. And before World War I, it was definitely not the case. So I think this is another passing disastrous bubble in the way people think around the world. But wait a minute, I went off on a tangent. What was your question again? Do you recall?
Yeah, we're talking about the GDP numbers in China and just basically their macro figures in general not being really indicative of what's going on. So as an investor, what should we be looking at instead?
I think that's true all over the world. So I don't know what's to be done about that, except I don't think you should use macroeconomic figures that are floated around as useful parameters for investment. I think what your listeners and everybody should think in terms of is try to produce more than you consume and save the difference. And forget about these macro numbers, because they're unreliable and they're meaningless to you as an individual. The main question is, in what form should you save your excess production? And then, after you've saved enough, where should you invest it? And those are two real jackpot questions. But I don't care much about the macro numbers.
So while we're on the topic then, I know you like gold. I know you like properties. What else do you like?
Well, I think commodities are coiling up for another run at some point. I don't know when. I'm interested in all the commodities, their real wealth. I do like farmland, partially for that reason as well. It's not cheap anymore, any place. I mean, it used to be that farmland was very cheap in places like Paraguay. But now Paraguay is integrated into the world's financial and agricultural system. There aren't even any real bargains there. One thing I have been a big bull on for years, and I put my money where my mouth is, to use a pun in a way, is cattle. Cattle have been in a big bull market for the last 4 years, going from about 90 cents to about $1.60. And I have a cattle herd and a dairy herd both in Argentina. But at this point, the cattle cycle might start turning. They're not cheap anymore, although relatively speaking, they still are. They've just run up a lot. Still look at them. Where else to go? Not interested in the stock market. The bond market is a gigantic short. I'm back to farmland and the precious metals. I mean, there are exotic things we could look at. For instance, if I really was interested in farming in a hands-on way, I would go to Africa for a lot of reasons. But that's not a practical suggestion for most people, because dealing with the politics, going to Africa and learning it's something that if I was 30 and wanted to do it, I would, but it's too hard. But I think it's a good suggestion for people, for that rare person that may be in that position. And of course, the Chinese are taking huge advantage of that. I mean, there are millions of Chinese that are emigrating to Africa at this point. They're going to replace the Indians in East Africa and the Lebanese in West Africa, and basically eat their lunch and take over the continent, in my view. Africa's a good place to be.
The commodities are an interesting space, but for the average retail investor, they're difficult to invest in, and that's why precious metals are so great for that. You can buy bullion coins no matter how much money you have, really. But what do you think is a good way for a retail investor to get into things like farmland and other commodities that are generally out of the reach of the average investor?
It's very problematical. I mean, one of the best commodities to get involved in is water. But how do you invest in water? It's very hard to do. If you get a big water resource, you can absolutely count on the government taking it away from you, either directly or indirectly through taxes and fees and royalties and things of this nature. So, I mean, water might be the best commodity, but it's impossible to invest in, and if you find a way, it might be dangerous to invest in. And as far as investing, speculating in commodities on the futures exchanges, most people inevitably over-leverage themselves and inevitably let their psychology take advantage of their judgment and blow themselves up. So I'm not sure that there is a good way to invest in commodities. I mean, there are a few commodity stocks around, but the stock market is kind of pricey, so I'm not sure I like that either. You know, the smartest thing the average guy can do, and I include myself in this, is to consistently buy gold and silver coins every month. In Canada, that means buy a maple leaf or a tenth of a maple leaf every month, and some silver maple leaves as well. Just buy them, put them in a safe deposit box, and forget about them. I mean, that way you're building capital. And right now, gold and silver are cyclically quite cheap. They're not at the giveaway levels as they were back in 2001 when gold was, let's say, $260 and silver was about $4 or $5. At those prices back in 2001, not so long ago, they were cheaper in real terms than they were back in 1971 before the dollar was devalued, when gold was $35 and silver was $1.29. So they're not that cheap now, but I think they're really good speculative candidates right now because they've come down a lot from their peaks a few years ago.
Before we move on to 2015, which I want to get into you, at the end of 2014, the president signaled a change in policy toward foreign relations with Cuba. What's your take on that? Do you think this is good or bad? I'd like to hear what your take is on it.
I think it's wonderful. It's just 50-some years overdue. This foolish idea of putting an embargo on Cuba, sure, it cost the Cubans some business, cost them American tourist dollars, which were the major source of tourist dollars for Cuba, but it was counterproductive for the Americans because it gave Castro a perfect excuse for why things were so grim in Cuba. I've been down there, I think, 4 times over the years, and the low standard of living is universally attributed to the giant Satan to the north. So the Americans played right into Castro's hands, and the Cubans can get anything that they need from the Europeans and from the South Americans and from the Asians. So they don't need the Americans. It would have helped them to have their tourists, but they had a wonderful excuse for the collapse of their economy. Furthermore, the stupid American government policy, when Cuba now opens up, they're going to find that all the hotels and the bars and the commercial real estate deals have been done with people from everywhere in the world, and Americans are going to be left high and dry. They're going to be able to spend their money but not earn anything down there because the Europeans and the South Americans have already made all the deals. So it's like embargoes all times and everywhere. It was very stupid, and I'm very happy to see it's going to go away. And as it does go away, and Americans can go down there, the average Cuban is going to lose these silly communist ideas that he's been inculcated with. So from absolutely every point of view, the embargo was stupid and counterproductive, and it's wonderful to see it going away.
Now, having said that, why do you think the U.S. is considering this now, after half a century?
I don't know. You know, the people that get into government aren't rocket scientists to start with. So who knows what's actually going on in their minds. As far as the U.S. government concerned, my guess is that it's the Cuban emigres that left in 1959 mostly, that had their properties confiscated and their businesses and so forth taken by the Castro government, which the Castro government is a criminal enterprise. But so these people have been lobbying to punish the Castro government, but it's very stupid on their part. So, but I think that's a major thing. And of course, you got a lot of people that still take communism seriously as an ideology, and they think we ought to fight the communists and punish them any way possible, which is another silly idea, because it just costs the Americans money, and by separating from the communists, I mean, it makes these people look at you as being an enemy as opposed to a potential friend. So it's all idiocy, in my opinion.
Well, that wraps up our show for this week. I'd like to thank our correspondent, Albert K. Liu, for his interview with Doug Casey. Of course, I thank Doug Casey for being one of our guests along with Ross Clark. And thank you for listening. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.